thing to me is what do you do this for? And if you could help somebody else live the 9 to 5 or be able to retire better or be able to fulfill their own dreams. Yes, I think to me it's just about how many people I can leave this world better when I leave than it is now. That's it.
Welcome, everybody, to the Building to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe that the key to scaling and compounding your wealth and life starts every single day with the mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to have you scale and compound your wealth and life so you can give more, all of it away. I'm excited about our next guest. He is out of the Tampa, Florida area. He's an expert in Florida real estate, especially, and also helping individuals, kind of build their first house, to their first million and above and above. He's done over 3,500 deals under his belt, including Airbnbs, wraparound mortgages, corporate rentals, private notes. He's done it all. And today we're not diving into the first million. We're really diving into the state of the Florida real estate market and also touching on some private debt and some such. Please welcome to show with me, Jorge Vazquez. Jorge, how are we doing?
Brett, it's an honor to be here. Thank you for the opportunity. I really appreciate it.
Absolutely. And for our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
Yeah, absolutely. Former financial advisor. Was helping a lot of people, a lot of clients on their wealth management about 20 years ago. They realized I was doing real estate on the side. And they're like, we like the annuities, we like the mutual funds, but tell us a little bit about the real estate. I had to let go of my securities license when the social media started, MySpace. My broker dealer didn't like the fact that I was talking about real estate, so I decided to go with real estate. But I was doing performance to properties before even bigger pockets. So that's kind of like how I started 20 years ago and helped a lot of people retire with real estate investing.
It's so great. I love the background. I have a Wachovia Securities where I started before I went to Marcus and Millichap. Yeah. You're Wachovia? Yeah, one of the few that
Wachovia Securities.
Yeah.
Get out of here.
Yeah.
Get out of here.
Yeah. So that was where it was brief, but I quickly knew that I wanted to go into real estate. I was like, yeah. So at one point I did get my securities, license 2263 to do some Delaware stuff, but I actually never really practiced as a financial advisor. I worked for a financial advisor doing like cold calls and doing like follow-ups. Anyways, long story short, I knew quickly I wanted real estate. So, and I'm glad I did. And in the 2008 crash, and that was really tough, but we built our way up from that point on. But I'm wondering, what would you say is the biggest aha in the last 20 years? And how glad are you that you left traditional securities world for the real estate world?
Well, it's funny that I was working through Wachovia Securities. I don't know if you know what happened with Wachovia. It went under in 2008 because of all the fraud they were doing when it comes to the negative arm type of loans. I guess we could talk about it in a different episode, but I did lose, by the way, 22 homes in 2008, so I had to restart again. Very tough, very different to what's happening now. I think that in 2008 it had a lot to do with a lot of mortgage fraud, a lot of negative type of arms, loans. People didn't know what they were doing. Right now, we don't have any of that. We used to have, I remember 2008, I have 45 short sales and nobody wanted them because the inventory was like at 25 months of inventory back in Florida. So nothing even close to that is happening right now.
Yeah, what's happening to that right now? Because that's really important, right? Because I think people they miss this and they see some things and they think that D.R. Hortons are not building or they're stopping to build or Florida real estate and all this stuff. And you're like, really? Like, so talk to us a little bit about if you had to gauge before interest rates jumped, right, about 2.5 years ago. Let's say that was a 10 out of 10. The market was buzzing. Interest rates 3.5. Deals are going. And then obviously it's changed, but if that was a 10 out of 10, where do you put us on a scale of 1 to 10 as far as like the health and the strength of the real estate market in Florida?
Well, I mean, the health is one thing, and I will say they were pretty healthy. and some people might agree with me, and some people might not agree with me. But what type of market it was? It was a seller's market. Now it's a more balanced market. So I ask you the question: is it a more balanced market, a more healthy market because it's more balanced for everybody? So it depends what we're talking about. So I would say for buyers, yes, it's a more healthier uh, a market. For investors, it becomes more like a balanced market. So you're not as a flipper. Maybe you don't have those crazy appreciations that you will have from one year to the other, where you buy a property and you can flip it for 200%. Uh, so it depends. Who are we talking about? So it
That's
depends.
a great point. Yeah, what hat are you wearing? That makes perfect sense.
Yeah.
So do you see any like thing that like, oh, like I gotta watch that, like any cracks in like the development market, the housing market? Like, is there anything that you're like, I'm not quite sure? Like, what's your sense on all that for Florida real estate?
Well, and that's an awesome question. We still have a surplus of people coming. And without talking about politics in detail, but people like the business atmospheres of Florida, the fact that it's a landlord state, meaning the laws are in favor of landlords. So you still have a lot of people moving to Florida. So I think Florida is going to be exempt for any type of market correction, anything that's going to be meaningful, anyways. On top of that, you have thrown, to your point, in the past 12 months, we have thrown at the market as much garbage as you can with increasing the Fed's increasing the rates, doubling the rates, insurance companies quadrupling insurance premiums, everything and anything, plus a hurricane, plus a bad hurricane season, anything and everything that you could throw, yeah, at the Florida market happening, the perfect storm, the past 12 months. And if that hasn't knocked us down, my friend, nothing's going to knock down Florida. That's the way I feel. And then you look at the numbers. You look at 2008, 25 months of inventory. Today, 6 months of inventory. We're still kind of tight when it comes to inventory. When you look at, DeSantis, the governor, looking at being super proactive when it comes to homestead exemptions, giving $1,000 back, possibly getting rid of property taxes. That would be huge.
Yeah, pause there because that was a huge one, right? And by the way, for
Oh,
those that don't know, I moved from California to Florida about 2.5 years ago. In St. Augustine is where we established headquarters for a lot of the same reasons that Jorge's talking about: the business friendliness of it, the beautiful beaches, the just a new adventure. Like, and we'll always love California, but business wise, it's broken in California, right? Out here, it's like incredible. So he's talking about getting rid of property taxes, right? So talk about it, Jorge. What's your sense on that? And do you think, on a scale of 1 to 10, can you get this thing done?
well, to the federal government. I don't know if you knew that they were trying to give. We were making too much money in Florida, believe it or not. So I think that it's a no-brainer. I think that I'm all in favor of it. But just talking about it, it brings investors. Just talking about it, just even if we could cut it in half or do something, minimize it a little bit, it's just that it's making investors take the risk even more. So I, I'm looking at my inventory of 40 properties that I own. They were going down practically every month in value up until like 3 or 4 months ago. So I think this year has been the market has been a little more bullish, thinking that things are going to come back. So the panicking sellers are far and few. As the market looks a little better, the bottom is going away. Those panicking sellers are going away. So I think for investors, this is a big window to buy anything on the bottom. I think tariffs. I think the guy's playing it really good. I think Donald Trump, whether you like him or not, is playing it pretty good. And I think if he trickles down every tariff negotiation in a weekly basis, he's going to have excuses for the stock market to go up, the market to go up weekly, because you give the news on the the negotiation of these three countries this week, Japan, et cetera, and then the next week, this other country, et cetera, et cetera. So if this is the worst, I can't even imagine what the best is going to be for Florida.
I could agree with you more. And it's an exciting time to be on this side. I think you said it really well. Like Florida's been, two hurricanes, the interest rates, insurance to the roof, so many headwinds, and it just keeps holding in strength. Now are there some cracks in some of the condo situations where they're being forced to renovate these properties to these standards that are just gonna that's definitely gonna hurt some people, right? And looks pretty sad, actually, really sad. But other than that, like, I mean, I mean, how's Tampa doing, by the way? I mean, since the hurricanes, how is it recovering?
Very nicely, because actually one of the articles that I wrote recently. This is why I'm so pro AI. I'm obsessed with the Chat GPT ever since it came out. Actually, that's what all I do with my company is doing research using AI. And it dawned on me. I was looking at talking about insurance. I started looking into the prospect of how many times has Tampa gotten hit directly by a hurricane.
Mm.
When I did my research, once in 100 years, and I'm like, crap, why 100% of my property is quadruple in premiums? And then I said, okay, we must have been hit a whole bunch of times in the previous 100 years. No, only once. So we've only gotten hit twice in 200 years in Tampa. So I did a research, became the number one actually in the internet. Anything tied to hurricanes in Tampa came up the number one. But so the insurance companies use the narrative of the hurricanes to increase everybody 400%. But that got deflated very quick because there was no justification behind it. Most really, if we talk about the Florida insurance market, most people think most of it has to do with the hurricanes, but in reality, that's not the case. The real reason why insurance companies were almost broke down was because of the amount of fraud that was happening until we legislated against it in 2020, where you could sue an insurance company. I remember I could sue an insurance company and say, I got a little crack on the wall and I will get a $25,000 check. And I couldn't tell you how many lawyers came to me and said, you own 40 properties, let's do 40 claims. That was prior to legislation now where insurance companies cannot be sued just because you have to really prove it, that the amount of repairs justify the claim.
Mm.
So after that change, and prior to that was the sinkhole fraud, where companies in Florida were going asking for $100,000, telling you, hey, I'm gonna get you $100,000 if you do this claim. So when it comes to insurance, that's why prices deflated so quick. If you're not proactive with it, you're gonna say, well, Jorge, that's not true. My insurance premium's pretty high. But if you shop around, I've been able to go from 400% increase to practically back to the same rates that
Interesting. So are there, when you say shop around, are there some go-to ones that you think are
Yes,
really good to look at?
absolutely, absolutely, absolutely. Well, first of all, do your due diligence, because sometimes 99% of the time when you're getting insurance, you're over-insuring the property. And you're over-insuring the property on things that you don't even need you're insuring the property for. And the insurance agent will not even tell you that some of these things are a la carte and could be actually taken out. So when you're talking to an agent, say, listen, this is a basic rental property. Give me basic insurance. I only owe 150. Give me up to the coverage up to 150, because at the end of the day, the lot is worth 150. So I don't need to. Yeah, the property is worth 300, but I just want to get the structure covered. And listen, I've managed thousands of properties, knock on wood, in Florida, and if uh, I've gotten 3 or 4 claims ever approved, it's a lot because they always want to decline them, or they have high deductibles. So to me, I'm not in
Yeah.
favor of insurance. You keep it as low as you can. But you wouldn't be surprised. Most people don't know this. You wouldn't be surprised how many things you could strip out of insurance and your lender still be okay with it.
Mm-hmm. Mm-hmm. Okay, that's good to know. So do due diligence, and as an investor, right? If you have a higher risk tolerance, maybe only insure up to the debt and/or insure up to a certain point, and lower that. Okay, that makes some sense. And the lender, you'd be surprised what they let you get out. Okay, interesting. Okay, so the other piece here, I think, Jorge, is interesting to think about. You talked about some private debt and some multifamily. What are you seeing in that world, and what do you like? What do you like about that market?
I think that the market is oversaturated and it has been for the past couple of years. Now, the good news is for people that are looking to exchange 1031 to something big because they started with small single family homes and it's an eventuality that you want to go from because of economy of scale. Once you get to the point, I'm not saying 20 units, 30 units. I'm talking about when you jump from a few houses to 100 units. Remember, the first thing you have to consider when you're doing that jump is if the economy scale is there. Is there going to be centralized management? And that's the only time that it makes sense. But Brett, everybody and their moms bought multi-units in the past 5 years. And when you look at the cap rate, you're lucky in Florida if you find a five. But the good news is that since the rents have been flattened the past couple of years, there's a lot of operators that are getting hurt. And they're probably going to start dumping some of these apartment complexes, realizing that they're not as profitable as they thought they were. So you might see some really good deals again. I remember, 4 or 5 years ago, you could find a 10% cap, 12, 13. Recently, you'd be lucky, Class B, you find a 6% cap.
Yeah, I could agree with you more. I mean, we got out of a lot of multifamily a couple of years ago when we thought everything was just crazy, and we actually, instead of doing 1031s, we sold and we got out of debt, and we used a deferred sales trust and deferred all the tax and went into private debt. So we got out of personal debt and invested, and then went into private, and now we're buying back the real estate at a discount. We just picked it all tax deferred. So we just did one for $68,000 a unit, 375 units, distressed seller. That one was in Tennessee.
Okay, got it.
Really good state. A syndicated deal. And we're looking at this, we're like, this is a no-brainer. So we use something called a deferred sales trust. I'm curious, have you heard about that before, Jorge?
Yes, I have. Yes.
So it works for Bitcoin, works for business, works for real estate. But the best part is you can time the market and you can sell high and diversify and wait.
Wow.
You can sit in the money market account. We like real estate, but I mean, we like private debt paying 10% plus. We've got one at 16% right now. It's like crazy because people have these ROEs of 3 to 5%. But the problem with the 1031 is you have to go equal or greater value with that 45, 180. Well, the market in real estate takes a year, 2 or 3 sometimes to shift all the way from the top to the bottom. It did in the 08 crash, 08 to 11. So, I mean, I just think it's so many people are stuck in the blockbuster 1031. And I love a 1031 when the deals make sense. But I mean, you think about that guy who's built up, 30, 40, 50 homes and he wants to exchange into an apartment complex. It's 100 units. 100 units, first of all, it's hyper competitive, right? Even trying to find that opportunity that makes any kind of sense and not get gobbled up by another investor. So what we do is we help people defer all the tax, capture into one place, and then go shopping at their own pace. They don't have to run with their hair on fire. So
that's exactly what I was going to say. That your own pace, to me, is all about your own pace. Because what makes it worse is you accumulated all this wealth, you stuck to it for 10 years, and now you got to make a decision so damn fast, so quickly to be able to find the property to replace. Most of the time, you make a mistake.
And time is too short, right? People want truly passive income. The whole Robert Kiyosaki, we've been thinking of passive income our whole lives. And, at a certain point, you're like, I've got enough millions. Now I need truly passive income. I call it no shoes, no shirt, no problem. You're Kenny Chesney on the beach. You're playing with your guitar and you have your glasses, your cowboy hat on, and the money is just showing up and you do nothing for it. There's no toilets, no trash, no termites. And we had a client, Warren and Catherine, we helped him in California, $2.5 million apartment sale. Property was actually doing great, 100% occupied. We sold it right at the peak. It was great. Paid off their debt, and we increased their NOI from 120 to 190. Okay. 60% increase using the deferred sales trust. We put a lot of it into private debt, diversified their wealth. And now they're like, Brad, this is the best. We wish we would have done this 5 or 6 years ago. Like, we have so much more time with our twin daughters. We have more time with our family. Like, we don't have to do anything. And it's great. Like, oh my gosh. So I talk about the power of truly passive income, right? I mean, nothing to worry about at all.
Talk to some of my clients that got to the
Yeah. And then the other side of it too is like sometimes the real estate fund manager, they're looking to raise capital for their next multifamily deal or their lending fund. And the problem is they say, okay, I want to raise for this, X return, 7, 10, 12, whatever it is, but the money is out there, like it's somewhere else. And so to show up to your fund, they've got to pay tax. And it's somewhere between, typically, unless it's like in an IRA or 401k. But on these big sales, 20, 30, 40, sometimes 50% of the proceeds are going to be crushed with the tax bill. So we figured out a way to defer the tax and then invest into the fund, all tax deferred. So it's like a bridge to your real estate fund. It could be Bitcoin, it could be business sales. So it doesn't have to be like kind, it could be stock. It needs to be like multi-million dollar exits, bigger exits. But to me, this is the Netflix. People want to learn more about this. I'm kind of going off a little tangent here, but I think it's important to understand that there's ways to do this without having to be stuck to the 1031 shotgun wedding. Go to capitalgainstaxsolutions.com. So Jorge, you've been on Bigger Pockets and you've got a lot of momentum there, right? Talk about the value of community and what you guys have built with your guys' company. Greystone, right? Talk a little bit more about that.
Yeah, absolutely. I mean, there's two ways of doing this business. You could do it the short term and be selfish and say, what can I get from you? What can I get from the client? And that's going to be short lived. Or you could go more like a marathon style and say, okay, how can I build family? How can I build long lasting clients? And to us, it's all about educating. We have an academy. It's called Property Profit Academy. Super affordable, 70 videos. It's myself, how I started investing from zero to the 40 properties that I own. But yeah, we just love helping people, love talking to other investors, and it shows in Bigger Pockets. I mean, one of my last posts had 300 likes and like 500 comments. So yeah, I mean, when you're sincere and when you really love what you do, I mean, you're there to help. The business comes on its own, and it repeats itself. So that's what I believe.
Awesome. I love it. I'm talking to Jorge Vazquez, and you can learn more about Mr. Jorge by going to greystoneig.com. It's greystoneig.com. Okay. So we've touched on the Florida market, the resiliency, we touched on some cap gain stuff, touched on, hopefully the property tax gets eliminated in Florida. That'd be really cool. What else do you want to share with the listeners, who, that I haven't asked you yet, that's kind of on your mind within the real estate market or investing?
I'm trying to think of your audience. It's a little different than mine. My audience could be somebody young, somebody starting, or somebody with a lot of money, but it has it on stocks and wants to do one property at a time. In general, I could say the real estate market is gonna continue doing great in Florida. So if you can thinking of Florida as a possible state to invest, all the signals are there. I don't see a 2008 coming up again in a long time. You tell me if there's anything else for your audience that you think it'll be useful for me.
No, I think that's helpful right there. We can just move to the lightning round. You ready?
Yes.
All right. Knowing what you know now, if you could go back to your 20-year-old self, what's the one golden nugget make sure you tell yourself to do?
Live under your means and don't spend money on cars. Don't invest, not spend. Yes,
Okay.
invest, not spend. Yeah.
Excellent. Yeah, I had this saying that the rich let their interest of their investments pay for their toys,
Yes.
right? The
Yes.
truly rich, right? Versus the other way around where you just, you earn income and then you spend it. And instead, like, you earn it, invest it, and you live off of that, and it pays for your toys and different things, right? It's a little extra step. Okay, great. Question number 2, number 1 book you've recommended or gifted the most in the past year.
Uh, to be honest with you, I do a lot of ebooks, but I will say Rich Dad Poor Dad is definitely the one for everybody, pretty much. So yeah, that's the one that anybody's studying. For your
Yeah.
audience, they probably already read that. Uh, I wouldn't not know what to recommend, to be honest with you.
Okay, that's okay. That's good. Yeah, Rich Dad Poor Dad. If you haven't read it, make sure you read it, and then or just reread it. It's such a good book. Next question: what are you most curious about right now?
Um, the global tension in what's going to happen with terrorists, and that's the thing that I'm the most curious, and also AI. What's going to happen with AI long term?
To that point, how are you best using ChatGPT?
Oh my God, I feel like ChatGPT. I'm the bionic man now. I feel like it completes me. Don't say that. Don't tell my wife I said that, but it completes me because I feel like I'm super smart. Um, of course, my English is my second language, and writing is I'm not the best, but it's just I think sometimes you know how your brain thinks faster than your mouth.
Mm-hmm.
In your brain, it's like, oh man, I could put this together. So the fact that ChatGPT could kind of catch up with me, I could say, hey, here, this, and that. But I'm doing some beautiful stuff with ChatGPT that most people will be like, wow. Here's the paradox: you can invent theories, do research that has never done before, invent theories, invent stuff with ChatGPT, where you could change the world actually with ChatGPT. It's amazing, very amazing.
Well, awesome. Well said. Last question, Jorge. After all your success helping the people you've helped, um, how do you best stay centered in your values and stay encouraged to charge forward to reach even higher heights?
Um, that's a good question. How do I think that you have to ask yourself what you do this for. What you do this for, because life is short. Especially when you have all the money already, you're already done whatever you want to do. You already traveled the world a few times. I think to me is what do you do this for? And if you could help somebody else, um, leave the 9 to 5, or be able to retire better, or be able to um, fulfill their own dreams. Yes, I think to me it's just about how many people I can leave this world better when I leave than it is now. That's it.
Awesome, Jorge. I'm gonna just thank you so much for being on the show. Thank you for being a fellow Floridian, and thank you for your passion for helping people build wealth within real estate and to make a difference in their communities and to provide housing for folks and all of the really amazing things that real estate provides. I grew up building houses with my parents in California, marketing and selling multifamily property at Marcus and Millichap. And real estate is just the core to who I am. And I can tell it is for you too. And I just want to thank you for living that out and helping others do the same. For our listeners who want to get in touch with you, could you remind one last time what's the best place for them to find you?
Yeah, so they could Google Investing Tampa, Tampa Investing, or they could Google best investment companies in Florida. We show up. Or they could go to greystoneig.com, greystoneig.com, where you invest and we do the rest.
There it is, Jorge, everybody, Vazquez. And thank you, sir. Also want to thank all of our listeners for listening to another episode of the Built to Billions podcast, also streaming on Capital Gains Tax Solutions podcast and YouTube channels. We're here to on this journey with you to be a guide, but also a participant in scaling from millions to billions so we can give more, all of it away, bringing on amazing guests like Jorge to give us inspiration, encouragement, wisdom on local market expertise within real estate, especially within Florida. Make sure you connect with them to stay connected for Florida real estate and investing. Of course, if you have a massive big exit going on, you want to connect with us at capitalgainstaxsolutions.com. So we talk about your Bitcoin, your business, your real real estate, defer the taxes. By the way, if you find a good 1031, fantastic. We have the best 1031 exit plan to give you that option. But in case it fails, we have the deferred sales trust as a backup plan. And so we're so appreciate everyone listening or watching out there. Please rate, review, subscribe, and we'll talk to you all real soon. Bye now.